All right, we're live. What's going on, my fellow entrepreneurs and business owners? Welcome to another episode from the Loan Assassin, where we bring you all the tools, training, and resources you need to grow your business. And today we're talking about startup funding. And we are joined today by Jose from BDA Solutions again. We did an awesome training last time where we talked about getting lender ready, what to do if you've been denied for funding. And you don't even need to be a startup for that. It was just a phenomenal training about just the overall process of getting funding for your business. We'll have a link to that in the description if you guys want to check that out if you missed it. There was some really good stuff in there. Jose provided some really, really good stuff. But today we're going to be talking about startup funding, how to get it, how to get lender ready, how to set your startup for success when you go to apply for funding. Also, what type of funding is best for your particular type of startup company, because some types of financing are catered a little bit more to startups. So you might actually be applying for the wrong type of financing. So you might get denied for that, but you might get approved for something else. So we're going to be covering all of that. The goal of this training is to give you guys a roadmap for getting funding for your startup company. So without further ado, Jose, welcome again, brother. I really appreciate your time. How you doing?
Good, man. How are you? I really appreciate you having me back. I appreciate the kind words there about the training that we had last time. We're really trying to help as many business owners as possible reach their goals financially, even getting started. And it's one of the most common scenarios that I come across on the brokerage side is I'm a brand new business.
Right.
I have absolutely nothing done. How do I get funding outside of my own pocket to get this thing going? So really psyched to kind of go over those details and get some of those questions answered.
Yeah, it's awesome, man. I really appreciate you being here again. We got really good feedback on the last one, so I'm excited about this. And like you said, and I work with a lot of brokers as well, including yourself, and that is one of the common scenarios that people run into in the business loan world is a lot of startup companies, which is great. It's really exciting to see.
For sure.
It's all about putting that plan in place to get them the financing that they need. Versus just blasting out a bunch of random applications and stuff like that to random companies, right? So where I thought it would make sense to start, and correct me if I'm wrong, if you want to start somewhere else, if you think it'd be more beneficial, let me know. But I thought maybe we could start with the most common types of startup financing that a startup company should be looking at versus what are the different types of financing that are best for startup companies? That's really how I should phrase it.
Yeah, so there are different types of financing options available for business owners overall. Again, we kind of went through the details of it during the last training, but in order for you to get approved for a financing vehicle, banks, lenders, private lenders, private investors are going to take a look at three things: your credit, your revenue, and whatever collateral you may have to pledge against the loan. So for a startup company, you are really limited to which of those three options you're actually going to present to the lenders.
Right.
9 times out of 10, the only thing you've got the ability to put any eggs in the basket is your credit. So going after credit-based financing is probably the best option for startup businesses to get any sort of financing. Obviously, you're in the startup phase. You probably don't have any revenue. And you probably don't have any collateral. If you do have collateral, that kind of changes the equation a little bit. But generally speaking, startup companies, it is best for you to go after credit-based financing to get your foot in the door and out of your pocket.
Right. So what would be an example of that? Are we talking about like a typical bank loan, term loan, equipment financing? Like what are some examples of some more credit focused types of financing?
So the best type of financing to go after that it's credit based is to look into business credit cards. The reason that I say that is because those credit cards typically come in at an introductory rate of 0% for anywhere from 6 to 18 months. You can really hit the 18-month mark if you know how to manage that credit line. And that's something that we can help you with. If you come on board and decide to work with us, we can help you figure out a way to not only extend the 0% introductory rate, but maybe even increase the amount that credit line is available to give to you.
Right.
So that would be first and foremost. Second thing would be term loans. We do have the ability to go out and get term loans for you. However, those are personal term loans, especially at the beginning. We're going to leverage your credit profile and your reported income to go out and get you as much money as we can through the personal loan route. But the negative aspect to that is it's personal. It's going to show up on your personal credit report. It is going to possibly result in your credit score dropping because the added debt, the inquiries, things of that nature. It is going to take its toll on you. So we want to try to prevent that from happening at all costs. That's why we tend to steer our clients towards the 0% business credit, because that debt does not report to your personal credit score.
Right. So what are the so the first thing I wanted to ask about the line of credit, what are the obviously this is going to depend on the credit score, I guess, but what is typically the amount of the line of credit? So if a company is looking for $500,000 in funding, is you getting a line of credit reasonable for getting that amount, or is it more to get them started and then you work towards getting the higher amount loans later on? Like what's typically the range for that?
So that varies on a client by client basis. So if you are coming in, and again, there's so many layers to this onion. If you're coming in and you have a strong credit score, let's say you're at a 720, but you've only got 2 trade lines that are reporting to your credit score that make up that 720, and I have somebody that has a 680, but they have 5 trade lines, one of them being a mortgage, a car note, a personal line, and maybe some personal credit cards. That score with the 680 is much more likely to get approved than someone with the 710 and a thin credit score. So it's not just about the number in that makes up your credit score. It's what's actually behind the number, the credit profile, that is going to determine how much you get approved for.
Right.
Now, through our consulting program, we do guarantee a minimum of $50,000 in credit approvals. Now, that does not come from one lender. Yeah, it doesn't all come from, it may, but we typically see the 50,000 accrued through 3 or 4 different lenders, each having their own, introductory rate and things of that nature. But we've seen approvals go up as high as 350,000. But that's someone that came in with like an 850 credit score and they had over $100,000 in reported income. So that we don't come across that too often, but it's a large range. It's honestly on a case by case basis.
Sure. Yeah. No, that makes sense. And if you guys are watching this and your credit isn't where it really needs to be, we're going to do a separate training on very specific credit improvement strategies. So make sure you stay tuned for that. Make sure you subscribe. Once we do that, we'll put a link in the description for that as well if you guys want to check that out. Because obviously, the better you can get your credit in the first place, the more likely you are to get approved. Also building that credit history and also the higher amount of a line of credit that you might actually get, right?
Yeah, for sure. Yeah, credit. If there's one piece of advice that business owners that would want to get their foot in the door or need to get their foot in the door with regards to funding, don't kick that can down the road.
Right.
Address the credit issues if you have them. Start now. Like I said in the last training, I've never met anyone that has ever said, I wish I didn't have good credit. Everybody needs it. Everybody will leverage it. Do it as soon as possible.
Right. Absolutely. So that kind of segues into the next topic I wanted to cover, was some basic things that a startup should have in place. So obviously working on their credit right now, but what are some other things that you find that when you're dealing with startup companies that end up, they're just not lender ready. They're not even capable of submitting the application. What are some basic things that a company needs to have in place to be lender ready to actually submit an application?
So yeah, this is another onion that I can spend hours probably going over several different key topics, and then within each topic there are several
Right.
sub layers that will
Maybe
affect
like
the
your
overall
top 3 to
outcome.
5 things. Yeah, like your top
So
3 to 5 things.
the first thing that you would need to have in place is a properly structured entity. Now, I'm not an attorney, I'm not an accountant, I'm not going to tell you what type of entity to create, whatever is the most beneficial for you for tax reporting purposes, et cetera, et cetera. But have an entity set up. That entity, the information from the name, the address, the registered address, the phone number, websites, all of that information has to be congruent throughout. There
Right.
are lenders that will go through and they will do a background check, for lack of a better term, on your entity. And if there are any discrepancies, with, especially with key items like the registered address, contact information, if that information varies from what's on your website, or your website doesn't publish it at all, that's a big red flag. So
Right.
make sure all of that is congruent throughout. Number two is have a business checking account. Do not, if you're looking for larger sums of financing, do not mingle your personal expenses with business expenses.
Right.
Keep those completely separate. With opening a bank account, you will have to keep in mind there are some industries that are red flagged. And if you are in that industry, I'm not trying to tell you to be decisive or deceiving or what have you, but a bank can deny you even opening a business checking account if they feel you are in that restricted space. So, an example of those is, possibly cash bail companies, adult entertainment companies, even some cannabis companies, depending on what state that you're in. So
Right.
try to keep the name of your entity as general as possible. Don't be very specific and say, hey, I'm AR, gun supplier LLC.
Right.
That's going to raise red flags and get you denied right off the top. So
Makes
those are
sense.
some, outside of the credit, those are probably two of the biggest mistakes that business owners make that will eventually, it may not affect them right here and now, but
Right.
definitely down the road, you're going to get denied for big
Sure.
amounts of money, even if you're bringing in the revenue. So
Right.
keep that in mind.
No, it makes sense. And I'm guilty of this. When you're getting into business, you're excited, you're building the website, you're building all all the tech stuff, and you're getting all these things together. It's easy to forget the basic foundation that you need in place. I didn't have a business bank account for a long time. I didn't even have an entity for a long time. I was just in business, just trying to grow. And then I got that stuff later. And, I've been in business for a little while now. So it's not a major impact at the moment. But I definitely wish I would have set that up ahead of time, or just been a little bit more forward thinking. So they're easy things to forget to do, basic business account. And I wanted to talk about the entity just really quick for those that maybe aren't sure what you should start with. I wanted to ask you, Jose, realistically, like, could somebody just start with a basic LLC, even if it's not what they need at the maybe longer term down the road, but just to at least have something in place in order to get the funding, and then they can always change the entity later?
Yes, that is an option. Again, I'm not an attorney. I'm not an accountant. I don't know, Jack from Jane, but I do know that an entity registered in the state that you are operating in with a valid EIN number that comes from the IRS are the two most basic building blocks to move forward on any type of funding venture. That EIN number has to be, again, registered at the same address that the LLC, the entity, is created in. Now, one thing that I would suggest anyone staying away from is establishing a sole proprietorship. That is one entity that I know for sure faces so many difficulties getting funding at just
Right.
about any level. So yeah, can you always set up an LLC and then go back and amend it later? Absolutely. Obviously, that's going to cost you a little bit more once you dive into the details with your accountant. but that is definitely something that I would at least suggest people begin with. Basic LLC, correct information registered to it, EIN number. Let's see where we can get going with that.
Right. Yeah, I agree 100%. So if you guys don't have an entity and you're not sure, like as I said, maybe just start with the LLC. You can always change it later. Obviously, it's not legal advice or anything like that. Do some research into it. Ask your accountant, ask your attorney. But if you're looking to get started with this and just kind of get the ball rolling, we'll have a link down below. There's a company called InkFile. You can also do LegalZoom, but I actually like InkFile better. They're cheaper. They'll actually file your entity. Like I just set up an LLC a couple of weeks ago for free. Like they didn't charge me anything. I just paid the state fee, and they'll also give you 1 year as a registered agent for free as well. And then you just pay the
awesome.
registered agent fee
Yeah, that's a good deal.
Yeah, it's pretty sweet, and it's a pretty easy process. You know, they walk you through step by step. So we'll have a link down below. If you guys don't have an entity yet, go ahead and get that set up, and then get your business bank account up and running. Make sure you're working on your credit. Jose, you'd say those three main things right there. That those are kind of just the basics you absolutely have to have in place. Credit.
That's a solid
entity,
starting point. Yep.
Business account. Right.
Yeah, for sure. Yeah, could not agree anymore.
Gotcha. Okay, sounds good. Let's see. We've talked a lot about the typical requirements for startups. So a lot of it's going to be based around credit. So we don't need to bring that up. What are some? Let's talk. Aside from not having the business entity and the business bank account, do you find that there are some common mistakes when you're talking with startup companies that they have made, whether it's within the entity setup, if it's something that they're doing in their business, like maybe they already have the entity, maybe they already have the business bank account, they have decent credit. Are there some common mistakes that you see people making that in startup companies that end up becoming a red flag or stop them from getting financing later on?
One of the biggest things that I've seen, especially lately, for some odd reason, the last 3 weeks, we do a lot of investing for real estate investors. So they come to us asking for acquisition funding, rehab funding, etc. One of the most difficult things that people tend to kind of, throw under the rug is making sure that once that LLC, that entity is established, that you keep it in good standing with your state. There are several investors that I've come across who are like, oh yeah, I've got an entity already set up. It was set up 2 or 3 years ago. And then when I asked them to, part of the closing process is please send me a certificate of good standing through your state. So that way, the lender is comfortable knowing that you are doing what you are supposed to be doing when it comes to reporting. And a lot of them have come back and said, hey, you know what? I haven't done it. I haven't reported to the state and have, kept up with my reporting requirements. So that's one of the biggest things a lot of newer business owners tend to, it's understandable. It falls through the cracks. They completely forget about it. Keep up with that yearly reporting. Make sure, depending again on the type of entity that you have structured, you may have to report your minutes. You may have to report, financial revenue and income and profits and all that other fun stuff. But do not ignore the filing requirements with your state. And the other thing too is, depending on the type of business that you're running, make sure that you have the appropriate licensing required for your business, and that's on a state-by-state basis. So if you are selling automobiles, for example, every municipality, every county, every state is going to require licensing from you. So make sure all of that is up to par. Make sure the reporting with regards to keeping that in good standing is up to par.
Yeah, put that on your calendar, guys. I've made that mistake, and luckily I got the right customer support on the line, and they gave me a break, because it will cost you a decent amount of money to reinstate your entity if you need to, and if you don't do it within a certain time frame, your entity is gone. So I've actually made that mistake. Completely forgot to do the annual reporting, and luckily I reinstated it within the grace period, and they waived the fee for me. So But don't make that mistake. Just put it on your calendar. These are the small things that really add up and make a big difference over the long run. I know you're busy running your business and you're doing marketing. You're trying to figure out how to get leads and clients, and that's great. But don't forget about the basic foundation, all right? Especially if you're looking to get financing. So I think that's a big one. All right, let's see. I wanted to I know this is gonna be a little bit tough. I kind of wanted to get your broad general input on this, and then maybe some things that you've seen work really good for startups once they get the capital that they need. Do you find that there are some best use cases for startups specifically? Because I know too, you focus a lot on helping your clients build up their revenue as well. You've got a great system in place for that. Do you find that when startups do get access to capital, what are some of the best, just kind of broad general use cases for that startup or for that capital so they can continue to grow and then maybe get additional financing later on down the road?
So yeah, the use of funds is probably one of the most common mistakes business owners make once they acquire the funding. I would suggest staying away. And again, this is all kind of going back to a little bit of financial literacy. Depending on where it falls on your profit and loss statement, if it is a cost that does not produce a return, you probably should not be using borrowed funds, regardless of the source, to basically be eating up availability. The use of funds should be restricted to something that is going to produce revenue, that is going to produce profit. If you are literally using that funds to go out and spend on entertainment, or to go out and spend on hardware that isn't necessarily a need that the company has, I would recommend against that use. A lot of business owners,
or something, right?
Well, I mean, if it's something that is absolutely needed, again, you need your employees to produce a result.
Right.
So if you don't pay them, you don't get the result. But if you're using it to cover, let's say, for example, a magazine subscription, or you're using it to cover an automobile expense that you have under your company, not the best use of funds. So again, it's something that should, if you invest into it, you should be able to get at the very least that amount back, if not more.
Okay. Yeah, that makes sense. Because otherwise, you're digging yourself into a deeper hole at that point. Because if you take on more debt, it doesn't produce more revenue. At some point, you're going to need to take on even more debt to service the previous debt and whatever else, right? Like it just makes more sense if you use it to, maybe some type of advertising or marketing campaign. Maybe it's some type of training program for your employees to increase revenue, maybe make more sales, whatever it is, right? So being strategic about how you actually use the funds once you get it, I think is really important. Do you find that a lot of business owners don't really have a plan in place once they have the funding? They know they want it and need it, but they don't have a really good plan in place to actually utilize it?
That's very true. And I'll take it a step further. There are a lot of business owners that not only not have a plan on the use of funds once it's acquired, they don't even have financial projections as to how that capital is going to affect their bottom line. You should be able to, at any point in time, typically give a 3-year period of financial projections and assess how added debt is going to translate to added profits. Many business owners overlook even developing a business plan. A lot of them don't know, what their SWOT analysis looks like, what their break-even analysis looks like, not only overall as an operating company, but also with the debt itself. If we forked over $50,000 to you, even if it is at 0% interest rate for 12 months, what's your break-even point? How many units do you have to go out and sell to pay back that $50,000 within that time frame? Because obviously that's how we best leverage. And to kind of go back to the point that you made earlier If you're using debt to cover expenses and it's not producing a result, always keep this in the back of your mind. Even though that introductory rate is 0%, there's a tidal wave coming to you. If that's not paid off,
Right.
the next round of funding is not going to be at 0%. It's
Right.
probably going to be back at typical market rates, double digit interest rates. So getting out of that hole is going to be much tougher if you just keep piling onto it, as opposed to being diligent about it and having an exit strategy to that debt.
Right. Yeah, because otherwise you're bringing on another massive expense into your business.
Right.
Not properly preparing for it. Two, how do you even know you need funding or how much you actually need if you don't know what your financial projections are, if you don't know what you're going to use it for and what your return on that investment is going to be, right? So yeah, I think that's really important, having a plan in place to okay, so what do we need this capital for? How are we going to allocate it? Long before you even start thinking about financing, because that'll help you determine how much you need at the end of the day as well. So yeah, good stuff. All right, I think what we'll do, Jose, we're coming up on the 30-minute mark here. We'll go ahead and start to wrap up. I'm going to put Jose's website up here. If you guys want to reach out and get a free consultation and have a conversation with Jose and his team to see how he can help with your company and put that plan in place. What I'd like to wrap up with, Jose, is what would that process look like specifically for a startup company? What is it? What kind of roadmap or plan do you typically put in place for a startup company?
So we have a program that's specifically tailored towards startup companies. What we actually do is we very much believe in the motto. I don't know if you're familiar with Andy Frisella. I'm a huge fan of his, and one of his most recent quotes that's gained a lot of traction is something along the lines of "Personal excellence is the ultimate rebellion." That is something that I try to emulate, not only in my personal life, but I try to take that mindset and apply it towards my clients. We try to position our clients so that they are in the best financial position before we even approach lenders. There are a lot of brokers that are out there that will take an application from you and send it to a bunch of different lenders, see what sticks, and come back to you with high interest rate, short terms, et cetera, et cetera. If that's the route that you need to go down, I personally feel we've got to hit the reset button and slow the momentum down on possibly making a bad decision after a series of bad decisions that have gotten you to this point. So what we try to do is pump the brakes on that, get your credit situated, get your business operations situated, make sure that it is performing at an optimal level so that you can choose to go to a bank, a lender, but you won't have to take on high interest, even any business that whatsoever, because you will be self-sufficient, you will be self-producing, and that is something that is it's worth its weight in gold. And we're trying to help business owners get out of the mentality of having to rely on banks, and instead let's look internally. Let's find a way that we can maximize our own potential, and then at that point, if we still have a gap that we need to fill, the bank comes in and fills that gap, as opposed to being the end all be all of all solutions.
Right. Makes sense. I love it. Awesome, man. We'll have a link down below in the description, guys. I've got the website on screen too, but I'll have a link in the description if you want to connect with Jose, have a conversation, see if it makes sense for you guys to work together to move the business forward and get the financing that you need ultimately, right? So with that said, we'll go ahead and wrap up. Any final thoughts, any final tips or anything that you want to share, Jose?
Again, please take a look at your personal credit. You are going to absolutely need to leverage that at some point in time, especially at the beginning. Now, I know that at the beginning of this training, we kind of went through a couple of bullet points of things that people will make mistakes on with regards to acquiring funding for startup businesses. I invite you to please reach out to me through the website, send me a message, and let me know that you heard this information on this training, and I will send you a free report on the 27 mistakes that can be easily prevented by business owners who are looking for startup capital. They will cover everything from personal credit to how to establish your entity, websites, congruent information throughout, collateral, the whole shebang. So that way we give you as much information as possible. You can take as much ownership as you want of those 27 bullet points. And then, hey, you know what, Jose, I need help here, here, and here. That's what we're here for.
Nice.
So yeah, reach out to us. We have resources and they're free. We're trying to help as many people as we can get into the best position possible so that they can excel in the very near future.
Awesome. I love it. We'll see if we can get a link to that, the 27 tips and mistakes and whatnot. We'll see if we can get a link to that in the description as well if you guys want to check that out. I think that would be a really good resource. So awesome, man. Well, hey, great training as I expected it to be. Really appreciate your time. Really appreciate you sharing your expertise. I think it was really, really helpful. If you guys wouldn't mind, hit that like button. Leave some feedback down below too. Let us know what you think about this. If you want us to do specific types of training, feel free to leave that in the comments as well. But we'll go ahead and wrap up. Jose, really appreciate it, and look forward to the next one.
Yeah, bro. Thank you very much. I appreciate your time, everyone. Thank you for bearing through this with us. Hopefully it was enough information to at least get you going, but we're here to help you whenever you need it.
Awesome. All right, guys. We will talk to you in the next one. Take care.